Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday evening, September 4th, 2025. And the time right now, just getting on to 5:30 p.m. Central Time. Now, tomorrow's a huge day because what we're going to get in the market is the August non-farm payrolls data. And economists are forecasting 75,000 jobs compared to last month, 73 after all those adjustments. The August jobless rate is expected to go up 1/10 to 4.3%, and the average hourly earnings are expected up by 3/10. If this report comes out as is, keep in mind, today you have the Challenger August planned job cuts going up to nearly 86,000. The August private sector, this is the ADP numbers, only up 54,000. So you're cutting more. You didn't add as many jobs. And the weekly claims were up 8,000. The continuing just stayed. I viewed all these numbers as still in the checkbox area where the Fed can cut if they decide to do it. And why not get ahead of the curve? There's a lot of talk about that. And if the numbers come in like this, just as they are, same thing. Now, if this number, instead of 73, say 125,000, that throws everything off. If the number's under the 73,000, say 50, yeah, I think the Fed goes with the cut. So I think tomorrow's going to be a huge, huge day in the marketplace. And it's not that you want to be positioned for it. You want to get positioned after it. And the reason is, again, you've got that train coming down the track. I know you think you can jump fast enough, but almost every week somebody can't. And you don't want to be that guy and be what happens. Am I making sense? Or that gal. It could be either way. You don't want to do that. So if you're not positioned for it already, don't worry about it. Now, before I get into my commentary here with you, remember, we have our Labor Day sales. It ends today, Thursday, Central Time at midnight. It'll go off and everything is gone. So this is your chance. 1/3 off any of my courses, 1/3 off any of either my 3-month research or my 1 year. For the futures, the spider, the ETF, the combinations of the two. I think you'll find it interesting. All right. So let's go to the marketplace if we could and talk about what's going on. You've seen the energy prices fall back because nobody's quite certain what OPEC's going to do. The fact that they're even talking another production hike for Sunday has captured the market's interest and also, if you will, hurt prices. Bonds and notes, well, they're building in, as you can imagine right now, the idea that it's up and away. Interest rates are going to fall. The 10-year note tonight is at 4.16. Hasn't crossed the 4 level, but it's coming down. So as we look at the gold market, it's up and away. It is up so far for the week, 2.72%. When we look at what's happened, you've recently begun on this long leg up to have a small correction on it. I don't know how deep it'll go. You've got the pattern of higher lows, higher highs. The market's over both the 18-day average, which is over the 100. The 100 is over the 200-day average. And the market has gotten back under the Bollinger Band, which is healthy as can be. And now the question is, can it go back up and start challenging the higher high numbers? That's what everything's going to be about. What will, and I'm going to ask you that question, what will the market do if interest rates look like they're going to be cut? Is that bullish or bearish the dollar? How is that going to impact the metal markets? Is that an inflation sign for the market? Again, you've got to ask it all. This is what's going to go through the marketplace tomorrow. You're getting to the point now in your readings where you got both numbers over 80 tonight in the gold market. Now, if we go back a day, and this was today, both numbers were over 80, but not the day before. Tomorrow's a crucial day in gold. It can develop an embedded reading. It's come all this way up to do it, and that's what often happens when you run a Bollinger Band. Now, you did hit that Bollinger Band today. You hit it the day before, the day before, the day before, and so on. You've got what we call that gorilla glue trade, where that happens, and now will you embed or you're going to fail. Tomorrow's a crucial day in the gold market. The gold-silver ratio, well, gold has been a bit stronger than silver, but not to the point where it's been able to cross back over that moving average. So silver, as I look at it, still has the benefit of the doubt. When you look at silver, higher lows, higher highs, you have an embedded reading. I think the pros are already buying the silver right here. I think they'll bail if they lose the embedded reading, and I think they'll look for the market from here at least 80 cents to $1 higher. We'll see if that happens. In the copper market, you've developed a new trading range in the market. I told you back here, this is what the market had to do, and you're now doing it. I'll try to widen out the chart more for us because that'll make more sense, but I wanted you to see how that all was working out. In the platinum, like in the other metals, you ran the Bollinger Band and you finally got a correction. And I think I was mentioning this just yesterday. Not embedding. Probably the 18-day average is the support zone to look for in the market. It is in an uptrend. And in the dollar, you've had a pattern where the market is stuck first in the Bollinger Bands. Second, keeps coming up to the 100-day average, the green, and not able to go anywhere from that. A lower close tomorrow, if you get numbers that say, oh, looks like the Fed is going to be able to cut. A lower close fits in with the traditional thinking, lower interest rates, lower dollar, as other currencies are going to try to hold their rates at this point. We'll see. Down the cycle, what happens is like other things. As the dollar comes down and you keep cutting rates, then you're looking for the economy to turn to the upside because the Fed's there saying, go boys, and that's often when the dollar gets stronger. Are we going to jump that and get the dollar just strong here? It could happen. Just be ready. Don't go in with preconceived ideas. Let them develop in front of you. Again, if you're interested in taking advantage the next 4 or 5 hours of my courses, my research, move your cursor to the top up here or go to iraepstein.com. Just hit courses or research, take advantage. I'm Ira. I'll catch up with you all in the other videos tonight and in the morning video when I cover what these numbers look like. You have a great evening. Talk to you later.